In this video, traders, we're going to look at the anatomy of an earnings gap trade. Stay tuned. Hey guys, warm welcome to you. Thank you for joining me. Alright, so earnings, great time to trade stocks, great opportunities, and there's some similarities we start to see with some of these earnings gappers. So I'm going to look at Snapchat specifically. Maybe we'll have time to look at another one. But just a bit of background here. You know, Snapchat's really not had that much love. It's okay. You know, it's pushed up from where it was. I mean, it was really battered, but it's, you know, not highs. We're not kind of ripping up. We're not doing an Apple or an Amazon on this bull market we're in. So everyone's looking to earnings. We've had a few kind of gaps on earnings, but you know, nothing that we should really kind of take too much stock over and just kind of look at it a bit objectively. So we're not trying to be heroes, not trying to guess earnings, but after earnings we very often get, you know, very similar moves, guys. This is the kind of thing that happens time and time again with earnings, especially misses or beats. You know, when we have earnings that come out and they're in line with expectations and we're not getting big gaps, you know, 2 or 3%, it's not the same thing. But when we're getting 10% plus gaps, or 8 to 10% plus gap, or 8 plus gaps, should I say, we get the same sort of scenario. Because if you think about who's on the other side of the trade, whoever's on the other side of a trade that earnings have gapped 10% against them, that's probably when you want to take some off the table. Probably when you want to take your loss. And you can see that other time frames are going to get involved. So let's look at it from a short-term perspective. So very often, when we have gaps, we have one of 3 things that tend to happen. One is, especially a gap lower, that we continue driving lower, we pull back, we go to lows. The other is that we try to push to highs, maybe we double top, then we roll. And the third one is that we go to highs and then we kind of fill the gap. Seems obvious, right? But these are very clear patterns that happen more often than you think. So the kind of what you're looking for is what's happening in the first 5 minutes, right? The first 5 minutes is quite a clue. You don't have to get involved in the first 5 minutes, but very often it's very telling. You know, if the first 5 minutes is kind of moving quite aggressively lower, then you start to err towards this kind of trade. If the first 5 minutes is sitting there chopping around, you start to err towards this one. And similarly, if it starts to rally higher, you start to err towards this. And the reason I say 5 minutes is because sometimes you might get 1 minute spiking, 2 minutes, just some order entries, orders at the open. But after 5 minutes, people have had a little bit of time. I know it's only a short amount of time, but people have some time to think about it, to adjust, to get a little bit more of a gauge of what's going on. So first 5 minutes, 1, 2, 3, 4, 5. Then you can start to think, all right, we've had a good down move. The pullbacks have been relatively shallow, and we've started to push to lows. So you start to think, okay, now let's see what's going to happen here. Let's see how it's going to react to any pullback up. Let's see if we're kind of going to push to lows here. How's it going to play out? And so some of the tools that you can use are your volume weighted average price. You can start to frame and see how price responds to VWAP. Now this is interesting because actually, you know, it came up above VWAP, and if you shorted at VWAP, you probably stopped out, but it didn't spend much time above it. Remember guys, VWAP is used by a lot of algos for selling. So if a fund, for example, says, you know what, we need to get rid of our Snapchat holding, they might say, okay, well, let's run a VWAP algo and let's get rid of our however many shares they've got over the period of the day. And so what they will do is they will split up their shares based on volumes. They will sell, let's say they're doing 1% of volume. Every time there's 100 shares gone through, they'll sell 1. And they'll do that and do that and do that. So as the price, you know, it'll start to try and get to average price. And sometimes these algos are a little bit more sophisticated in that as price is closer to the volume weighted average price, they'll get a bit more aggressive. They might do 2% or 3% or 4% of volume, which is why very often on these heavy days, pullbacks to VWAP, we get turns at the VWAP because very often those algos are getting a bit more aggressive and you start to see the supply demand shift. So this kind of thing rolling over, you know, and then you start to think, well, where are we? And the most important level that we want to look at, or one of the most important levels, is the open, because the open is the voting system of where things are opening. It depends on exchange you're on, with a specialist or not, that kind of stuff, but it's generally a good vote because a lot of people are going to be voting. And if we are less or under the open, then most of the time you've got to say, especially after the first 5 minutes, like I say, you've got to sort of align yourself with the short side. Now, is it free money? Of course it's not, because if you short too early, you're going to get stopped out. Very difficult to judge. So the open is our first guide. The VWAP is another good guide, giving it after a bit of time, of course. The other one we can use is our, not necessarily fib, because I don't think a fib is, it's okay a fib, but you can really look and see 50% retracement, 25% retracement. Start to see where price responds, and you can see if it's struggling at 50%, still below the open, you've got a bearish thesis. It might not necessarily be, you know, completely hammering into the ground, but you start to realize that. So now you start to frame the trade. You go, right, here's the open, there's our VWAP, and there's our low as well. These are the important levels. And so after the first kind of hour or so, if it's trading below the VWAP, near the low, way below the open, so it's driven, it wouldn't be the same if it kind of sit here in a range, but if it's below the low, below the VWAP, below the open, below the VWAP, below the 50% range, and just grinding lower, the chances are it is going to go lower at some point. It might not be the crystal clear, lovely drive that we want to see all the time, but you might well have that, and then it kind of rotates and rolls and rolls and rolls, and then it finally goes. Because if you think about the supply demand, what's going on behind the scenes here, you've got buyers, you've got sellers, bit of kind of battle, then the sellers are in control, and unless there's any buyers to overcome it, at some point those sellers are going to have to get a little bit more aggressive to get their orders done. And so that's exactly what you see, kind of seeing them break to the downside, this kind of stuff, and also vice versa. So brief recap, guys. Where is price relative to the open? Super key. Where is price relative to the VWAP? Super key. Where is price relative to the daily range? Is super useful as well. And you know, how long is it staying at that level? Now I've just picked Snapchat because it happens to be one today, but it's a very similar pattern that happens very often on any of these earnings gappers. So big earnings gappers, this kind of move very often happens, especially sometimes later in the afternoon you get this break lower as well. So watch out for that, and some things to look out for. And it helps you not necessarily trade, it also keeps you on the right side of it. So now, you know, you're probably risking a little. It's probably, even though people get so tempted to do this, you know, buying at this level, you might work for you, but over multiple trades, it's not the best trade. Now, if it starts to come up, starts to hold above the VWAP, you know that maybe the selling is done in the morning, it's now an afternoon trade. Maybe now you can look for a push to highs. So you start to frame your trade based on those things: the open, the low, the position, the range in the range, and the VWAP. And it helps you guide a little bit more as to where you think the market's going to go, where the high probability trade may be, and also where the bigger money is moving stuff. Because that's the key, guys. It's not really relevant about day traders or this or the other. It's where the big money's moving stuff, because they're going to move stuff for multiple days, multiple weeks. Alright guys, take care. See you next one. Bye bye.